Good morning, good afternoon, good evening. Welcome back to the channel where we talk about economics and crypto and lots of other fun things. In today's video, I want to take a look at two huge differences between now and 2022, 2018, 2014, going into 2015, the previous bear markets, and just show you with a lot of data. There's a lot of charts and a lot of data in this video. Show you with the data, removing emotions from this, just the possibility that this time might actually be different. And there's evidence showing that. Now, that doesn't mean that we're not in a bear market or anything like that. Just look at the data and analyze for yourself. Before we do that, this is not financial advice. Take a screenshot of this if you wanted, all the disclosures. And do me a favor, hit the subscribe button, turn on the notification button as well. But let's go ahead and dive on into this. So this chart, Bitcoin dominance, but Bitcoin dominance showing you what Bitcoin dominance did during periods of quantitative tightening and quantitative easing. This is why 2025 threw so many people off. It's because we looked at quantitative tightening in the past. Look at that very short window when we had quantitative tightening, and look at comparatively to the period of quantitative tightening that we just got out of, the very short window of time where we had quantitative easing. We had a prolonged period lasting, what was it, to 3.5 years. 3.5 years of quantitative tightening. And that's why I was not excited about 2025. And in 2025, actually we did better than I thought we were going to do this time. A year ago at this time, I thought it was going to be way worse heading into 2026. So what do we make of that? I don't know. But you know what I'm talking about, though. Like, everyone was very bullish going into 2025, thinking it was going to be like every other post-halving year, and it wasn't. And I think this chart can explain to us somewhat, a little bit, probably more than half of the reason why we did not have an exciting 2025. And so what do we make of this? Well, there's some similarities that we need to draw to the ending of quantitative tightening on December 1st, 2025, and the ending of quantitative tightening in late June of 2019. June of 2019, Bitcoin, you can see Bitcoin dominance went up big time as Bitcoin put in a $14,000 price point. And a lot of people were thinking, oh, we're so back. And altcoins didn't really do all that much. Ethereum did okay, but a lot of altcoins were just flat during that time. Does that sound familiar to the period of quantitative tightening we were in, where Bitcoin did its thing? It went up to $126,000. And some altcoins did pretty well, but I think for Ethereum, for example, Ethereum did put in a new all-time high, but I think a lot of people were expecting Ethereum to go much higher than that. Myself included somewhat. I am expecting between now and the next halving, at least the next Bitcoin halving, for Ethereum to put in a much higher high than what we saw at $5,000. So this explains a lot. Okay. And it's, I talked about quantitative tightening. I talked about why I was not excited about 2025. I talked about high interest rates and this environment being flipped on its head from previous bull run years, from previous post-halving years, So what do we make of this? Well, let's take a look at this chart here. And I'm actually going to want to show you a better chart. So what I'm pointing out here, what I want to point out here is actually the MACD on the monthly scale. So this is a monthly chart here, and it doesn't cover all of Bitcoin's history, annoyingly, which is why I'm going to show you a different chart here in a second. But what I want to focus on here is the bottom with the MACD and the MACD histogram. So I stole one from somebody I follow on X. His name is Brett_ETH. And if you were to read the tweet that this chart is from, what you'll see is he's pointing out that every time we have had a bearish crossover in the monthly MACD, in this indicator right here, you can see the arrows. There's 4 times in Bitcoin's history that we've had that bearish crossover. Every time we've gone much lower since then. You could see 2014, we had that bearish crossover, went down. I'm not even going to say the numbers. I don't even remember the numbers, but 2014, we had that bearish crossover, went down and bottomed out several months later. 2018, we had the bearish crossover, but you can see even 2018, we were pretty well into the bear market. But, Bitcoin still had another 60 or so percent drop after the moment of that bearish crossover. 2022, we had that bearish crossover. That was early in 2022. I think that's February of 2022. We had that bearish crossover, and then we had another 60 or so percent to drop. And so is that going to be the same this time around? Another bearish crossover, 2026. January of 2026, we have the bearish crossover. And so therefore, Bitcoin is going to drop 60% from here, which let's say Bitcoin around $90,000 in January of 2026. So we should expect Bitcoin to go down to $40,000, maybe under $40,000. Well, there's one key moment that that we very much need to keep in mind. And actually, Brett, I'm sorry, but you missed this. Okay, and let me show you this. Here is the MACD historically. And did we have a 60% drop after every single bearish crossover in the MACD? Actually, we didn't. There's one time right here at the end of 2019. In 2019, we did have a bearish crossover in the MACD. And that did not lead to a 60% drop. It didn't. And so what do we make of that? Well, is there any comparison to the end of 2019 and today? Actually, there is. Wouldn't you know it? We exited quantitative tightening at that point, a few months earlier. We finished quantitative tightening a few months earlier, had that bearish crossover. It did not lead to a 60% drop in Bitcoin. And I'm not counting the COVID crash. I don't even remember percentages. But all right, let's not include the COVID crash. That was a black swan. If we have a black swan, sure, maybe Bitcoin would drop 60% from here and I'd be selling a kidney to buy Bitcoin at that time. But okay, same deal. Same deal. We have right now an ending of quantitative tightening and then a bearish crossover in the monthly MACD. So does that mean that Bitcoin's going to go down 60% or does it not? Data is limited. We have historically five periods of a bearish crossover in the monthly MACD. 4 of those 5 times, Bitcoin went down another 60% at least. This time, I'll just, spoil it. I don't think Bitcoin's going down 60% from here. I very much do not believe that. And I think most people don't believe that as well. So I don't know, is that a good thing or a bad thing that I'm kind of with the crowd here? But let's move on. Here's some of the things to take away from this. And I want to speak in terms of probability. What I would say right now is that there is a higher probability that this bear market isn't really going to be all that bad, especially if you overlay it with previous bear markets. Okay, you can make a much more compelling argument than any other, quote, bear market year in Bitcoin's history that we're not actually in the bear market. All right, don't get too excited yet. Sorry, I'm in the way. All right, let me minimize myself a little bit here. You can make a much more compelling argument than any other, quote, bear market year in Bitcoin's history that altcoins could outperform Bitcoin significantly in 2026. You can understand what I'm saying here. You can make a more compelling argument than any time in Bitcoin's history. That does not mean that the bottom is in. All right, it just doesn't. But there's reasons to be more hopeful right now than if we were in January of 2022. January of 2022, what was ahead of us was miserable. January of 2018, what was ahead of us, after alt season finished, was terrible. It was a disaster, especially for altcoins. So, okay, let's move on. We have some very important technical indicators to review because there are some things that we're going to want to look for to see, all right, is this time actually different? And as of right now, we can't make that argument if you just look at the charts that this time is actually different, but maybe in a few months we'll be able to make that argument. Okay, so Bitcoin, the first thing I want to point out to you, I forgot to read those. The 200-day moving average, I flipped this a little bit as I put everything together. Key Fibonacci retracement levels, we're going to look at that after we look at these other things. The 25, 50, 100, and 200-week EMA, very important to compare where we are now to 2022, looking at the EMA, and then weekly Bollinger Bands. So we're going to look at all those charts and a few other things here. So the first thing I want to point out is the 200-day moving average. This is a key level for me because I remember 2021 and I remember actually 2022. I remember unfortunately getting sucked into this idea that we might be back. We might be back. All right, maybe we're back. And I wasn't declaring anything, but all right, we're so back. And what happened in 2022, Bitcoin, it had it. We started the bear market, got down, man, I barely remember this, got down to $32,000. But then from $32,000, we rallied up, 50% gain to $48,000 and got rejected right at the 200-day simple moving average. Okay, so does that happen again this time around? I've talked about this in previous videos. Right now, the 200-day simple moving average is at $106,000. Give it a few more weeks, it might get down to like 102 or something. I don't know the exact dollar amount it would get to, but all right, maybe we'll rally up to there and get rejected there again. It's a possibility. And so that's something that I'm going to be keeping an eye on. If we broke through that, then we'd have other levels to look at, but that is a very important level. Now, let's factor some other things in here. Look at where we held as support. So let me explain some things here. These are the weekly EMAs. We have the 20-week EMA, the 50-week EMA, which we really just cut through like butter. And then the 100-week EMA, we held that really well. We held that as support really well. And so now what do? Maybe now we rally up to the 50-week. That's at 98,000. The 20-week is at 99,000. It's the 20-week. I accidentally said 25-week. It's the 20-week. It's $99,000. So is that a resistance, or do we break through there? We'll see. I'm sure there will be some level of resistance there. But this is the key thing that unfortunately we do look a lot like 2022 when we look at the next chart. And so does this sound familiar? Look at 2022. We held the 100-week moving average. We held it perfectly. And then we, chopped for a few weeks, just like now, chopped for a few weeks. And then we rallied, made our way up, and actually broke through the 50-week and 20-week EMA. But then what do we do? I mean, you've already seen this on another chart. We got rejected at the 200-day moving average. That's why this is such an important indicator. So it's like the 100-week EMA is an important level. And I wish I had seen this. I just caught this. I wish I had been paying attention. I wish I had seen this before, because that would have been a great place to be opening some longs and to be holding some spot positions, buying some spot positions ahead of a potential rally. A lower high to the 200-day moving average, but I missed it. Sorry. I am going to point that out on my X account. Give me a follow on XWW Bitcoin. So, here we are now. That's going to be a really interesting place to see. Now, if we can break through the 200-day, which again is around 106 right now, if we can actually break through that, then maybe 80K was the bottom. But we're doing the same. It's the same playbook as 2022 right now, and so we have. It's going to be interesting to see where we go from here. And something actually I'm noticing now as I'm just looking at this chart too, is look at what happened in 2022. We did get rejected at the 50-week EMA, and then went back down to the 100-week EMA, and then rallied. So what does that look like now? Maybe if you're in any longs right now, you get up to the $98,000, it gets rejected there. Maybe kisses $100,000 and then gets rejected there and then moves back down to the 100-week EMA and then rallies. We'll see. So whatever. The really key thing I want to point out is, like, as exciting as it is right now, maybe you're getting sucked back in. To declare that we're back on, which I have seen some people do, that is premature. Don't do it. Okay, let's move on. Another thing I want to point out is the weekly Bollingers. Just some compelling places to look at here. I do wonder if there's going to be some resistance at the middle Bollinger Band, and give it a few weeks. That'll line up very well with the 50-week EMA and the 20-week EMA. So that was all I wanted to see for that. And again, some perspective here. Does this mean if we get rejected, let's say we get rejected at the 200-day moving average, does that mean that we're going to have a repeat of 2022 going into 2023? In my opinion, absolutely not. I don't think that this is what's coming. And why do I not think that? I've given my perspective here. It has a lot to do with, let me go back. Sorry, I'm going way back. It has a lot to do with this. Personally, let's just say the spot Bitcoin ETFs did not exist. I've given my opinion on this before. I don't think Bitcoin would have gotten anywhere near $126,000. I think a lot of us would have been just as disappointed with Bitcoin, almost as disappointed with Bitcoin as we were with altcoins. Let me back up on that. We would have been disappointed with Bitcoin. Bitcoin might have hit a new all-time high. During this period, during a period when rates are high, when liquidity is being removed, you remove the spot Bitcoin ETFs, I'm not entirely convinced that we would have hit a new all-time high for Bitcoin in 2025. I've given my analysis on that. The impact of the spot Bitcoin ETFs, it was significant. And so, okay, we are in a new environment. I know, every bear market, people want to say this time is different, but we are in a different environment where we just are. This bear market is much different. If it even is a bear market, it's much different than previous bear markets, where we do have much more institutional and sovereign nation involvement right now than we did in 2022. And so what I think is going to happen, I'll share it with you in this chart. I have two scenarios here. Scenario number one is, all right, we make our way to the 200-day moving average at some point, get rejected there, make a move down, and maybe a small bounce off the 100 EMA, and then move down more. And then I have scenario A here, which I know what's scenario A. That's just, remember that level, that range that we were in. Bitcoin before the halving hit a new all-time high, got up to 73,000, some change like that. And then, during the peak of tariff fears, we ended up holding that level of support. It's possible that that's going to be the bottom. It's possible. I lean in the direction of scenario B, where no, we go down to the 200-week moving average, which has historically been a bear market bottom. But because, as crazy as it sounds, Bitcoin only going to $126,000, that's not nearly as bad as previous bear market bottoms, where the 200-week simple moving average is actually much higher percentage-wise as far as a percentage drop. So scenario B, we go down to the 200-week simple moving average. If we are blessed with that opportunity, I'm going to be buying a lot of Bitcoin. And I've shared with you my perspective on this. I believe Bitcoin will hit a new all-time high, if not in 2026, then in 2027. And it's going to go much higher than $126,000, much higher. Okay. So, all right. Well, what if 80K was the bottom? There is a chance that 80K was the bottom. I don't think so. What if 80K was the bottom? I don't think so. And I do believe that Solana is going to $50. I was wrong to short Solana when I did. And I apologize if any of you shorted Solana with me. I got stopped out and that happens. All right. But I still believe that an altcoin like Solana is going to go to $50. I have some entry points in previous videos that I've mentioned. So what if 80K was the bottom? All right, well, we have a lot of work to do if 80K was the bottom, and I've already mentioned those levels of resistance. The 50-week the 50-week EMA, but the 200-day is the big one that I'm paying attention to. Let's see. Let's see what happens when we get up to. We're most likely going to get up to the 200-day at some point. So let's see what happens when we get there. If we are able to break through, I am going to be cautiously optimistic. Because above the 200-day moving average are some very key fib levels that if we're able to break through those, then I'll be excited. But what are those levels? The 618, that's $109,000. The 702, it's hard to see, it's $112,000. The 786 would be the last line, that's 116 or so. And if we get up there, I'm going to be very nervous and very hopeful that yeah, we're actually we're good to go. But what I think is going to happen is a rejection at the 200-day, a move down to the 200-week, and then a move up that will take the rest of the year, maybe into early 2027, to finally then break through these Fibonacci levels, which won't even be a thing because we'll have to draw new fib levels at that point. So we'll see. I mean, I'm not saying it's impossible. I'm not saying that that you know there's 0% chance. I would say something like a 20% chance that 80K was the bottom. But all right, I want to warn you about something. This is a reason to be excited, I guess. I mean, let's remove the politics from it. I'm sure that there's plenty of people because Trump's involved, they're going to say that this Venezuela thing was terrible, and other people who I am removing political opinion from this. The facts are, with this, there's $18 trillion worth of oil. Trump wants to sell that oil. That is potentially a massive injection of liquidity. That's half of our national debt, less than half actually. That's more than the Magnificent Seven, the market cap of the Magnificent Seven. There is a potential windfall from this that could be significant. I'm very bullish on stocks right now. The sky is less clear for crypto because of the cycles, just because of what people are used to with the cycles. But be cautious of this Venezuelan oil narrative, because I could see us getting up to this 200-day moving average or getting up to these fib levels and people being sucked in at the worst possible time. And what's their reasoning for getting sucked in? Oh, well, we're going to make trillions of dollars from selling Venezuelan oil. That seems like a very nice narrative to get retail sucked in and to get turn retail into bag holders again. We'll see, though. All right, now, again, removing political ideologies from this, I am intrigued by this on a longer timeline. Because for me, 2027 is more where I can picture the stars aligning to where liquidity is just moving in our favor and risk on activity explodes. So risk on Bitcoin, but much more so altcoins and even meme coins. All right, so what about altcoins? Could altcoins rip as Bitcoin makes its way to a lower high or a new all-time high? That's difficult to analyze, but here are some data points. Okay, we have quantitative tightening ending again. What happened with Bitcoin dominance? I mean, in 2019, 2020, Bitcoin dominance rose a little bit, and then, it was more favorable. Okay, so this is, I will say, a net positive for altcoins. It's not necessarily that altcoins are going to explode in comparison to Bitcoin, but we're out of the abyss. We're out of this disaster of an area in terms of altcoins. We're out of that. Okay, cool. We are not in a period of quantitative easing. The ending of quantitative tightening does not equal the beginning of quantitative easing. If we were now in a period of quantitative easing, I would be an absolute moon boy. But that's going to take some time. I mean, look how much time it took. And then when we entered quantitative easing, that was because of the Black Swan event, of the COVID crash. It might actually take a decent amount of time longer before we enter into quantitative easing, which is, again, maybe we would begin something like that in 2027, but not right now. So that's this is a kind of in our favor thing. Okay, Bitcoin, quantitative tightening is over. But okay, here are some other things. I've shared these in recent videos. We have rates coming down, making their way down. I don't know if they're going to bottom in 2026, at least with where we are right now. We'll see what happens with unemployment. Okay, that's another positive, another positive. We have the Federal Reserve. I mean, this is the end of, the quantitative tightening's over. So, what's going to happen with their balance sheet now is an opportunity for liquidity to increase. We have potential with Treasury buybacks, with money market funds, with Venezuelan oil. That's the thing that's just I'm not going to get excited about it at this moment. And I don't want to even get excited about that, I just don't. I need more information. Will we see, manufacturing increase right now? I mean, it does look like it bottomed out in 2023, and it does look like it's kind of trending in the positive direction, but it's slowly trending. And again, every time manufacturing peaks, it has been the peak of euphoria for crypto. So thank you, Raul Pal. And then, from my boy Decode here on X, when do we see orange on this chart? This is a macro trend oscillator. And would the combination of everything that I have just shown you turn us in the direction? I mean, we're kind of trending upward right now, but do we go more vertical when it comes to liquidity being injected into the system? And when does that happen? And those are all questions. That I would say, yeah, you know what? Things are looking more favorable. They are trending in the right direction, but things take their time to play themselves out. So here's my conclusion with all of this. Bitcoin is more likely to put in a lower high in early 2026 than it is to put in a higher high. I'd say something like 80% to 20%. 80% chance that Bitcoin is going to put in a lower high, not a higher high, not a new all-time high, basically. If Bitcoin puts in a lower high, altcoins have about a 50-50 chance of outperforming Bitcoin and a lower than 50-50 chance of giving us alt season, quote unquote alt season. I don't know, 10% chance that we would see alt season in 2026 under this condition where Bitcoin puts in a lower high. If Bitcoin puts in a higher high, the likelihood of an alt season increases dramatically. Because, my goodness, let's just say that the bottom is in and Bitcoin puts in a higher high in early 2026. Throw everything that the 4-year cycle, just throw all of that out the window, and we are in new territory. And we are in territory because remember, I'm very bullish on stocks. I think there's only really one direction for stocks in 2026. We'll have ups and downs, but I believe that direction's up. But we just have this pressure with crypto that at some point we're going to deviate from. But for the first part of 2026, I think it's going to look like the same playbook, which is, okay, yeah, Bitcoin's having its bear market year. Let's buy in October of 2026 and then whatever. And I'm very much convinced that that's not going to be what happens, that Bitcoin will bottom out sooner than then. So then, when does Bitcoin put in an all-time high? Again, it bottoms, in my opinion, second quarter, maybe third quarter, maybe. Altcoins bottom out sooner than that. Just like in 2022, altcoins bottomed out sooner than Bitcoin did. They bottomed out, 5 months earlier. So, okay, there's a lot of things. If this was any other year, I would be just a flat out bull. This year in particular, the timing of this, the fact that so many people have this hive mindset of this is how it's going to go. So they're going to put some downward pressure for as long as they can on the price until they can't anymore. That's the only thing that's giving me pause right now. So anyway, I hope you got some value from this. If you are still watching and you're not a subscriber, do yourself a favor, hit that subscribe button. I was gone for a while. I'm back just for a month or two, but I'm back in full force. You can expect videos from me Monday, Wednesday, Friday-ish, 3 to 4 videos a week. And we're going to do member live streams. We're getting back into members live streams every Tuesday and Thursday. So I'm excited to be back, and I look forward to seeing you in live streams and in other videos and in the comment section of this video. I'll see you around. Have a good one. Peace.